Hello, everybody. Welcome to Plant Healthcare's presentation. My name is Chris Richards. I'm the CEO of Plant Healthcare. I've been in this industry for many, many years. I spent 20 years in a company which today is called Syngenta. When I joined it, it was called ICI. And then in 2003, I was headhunted to go run a newly created private equity-backed agrochemical company based in Tokyo called Arista Life Science. I ran that for a number of years, sold it in 2008 to Permira for $2.4 billion, made nearly 6 times return for the first private equity owners, stayed with Permira, first as CEO and then as chairman, until they sold it to New York SPAC for $3.5 billion in 2015. I joined Plant Healthcare right at the end of 2012 because I was really excited by the technology, and I'm very pleased to be here today, 8 years later, telling you how we have progressed with bringing that technology to farmers all around the world. I'm joined today by our CEO, Jeff Tweedy. Jeff, say hi.
Morning, Jeff Tweedy, COO of Plant Healthcare. I've been here just over 3 years. Prior to joining Plant Healthcare, I'd been with Arista Life Science for 9 years, running the North American sales team, business development and development roles in Arista. And prior to that, I spent 11 years with Syngenta and Legacy Zeneca in various technical and marketing roles. I've been in the industry over 30 years. The last 10 to 12 years have been focused on the biologicals business.
Thanks, Jeff. Appreciate it. Well, let's turn the pages now. The first couple of pages are the disclaimer, which I think we can take as read if we go straight to the executive summary. So Plant Healthcare is about sustainable agriculture. Now, agriculture is changing rapidly, and there is more and more pressure for agriculture to become sustainable. Within that, biological solutions are essentially a proxy for sustainable agriculture, and demand for those biological solutions, and that's where we play as Plant Healthcare, it's growing at more than 16% a year. Now, Plant Healthcare, we made an early decision. We could have targeted this company at organic farming, and we decided not to, simply because conventional agriculture, mainstream agriculture, represents 95% of global food production. Organic is only about 5%. So not only is it a bigger economic opportunity for us, but critically, we need to improve the sustainability of mainstream agriculture if we're going to make a real impact on the sustainability of food production as a whole. Now, we'd like you to think about Plant Healthcare in 2 pieces of business. The first, our existing commercial business, and that's a small but really interesting business. We sold $6.6 million in 2020, but it's profitable now and it's cash generative. And we're expecting revenue to grow pretty rapidly from now on, based mainly on 3 markets, 2 in the US and 1 in Brazil, where our in-market sales doubled last year. And Jeff Tweedy later will tell you exactly why we're so excited about the growth of our core product there, Harpin alpha beta. Now, on top of our commercial business, we have a most exciting new technology, which we call Pretech. We also call it vaccines for plants, which is a really simple way of understanding how both Harpin alpha beta and the new Pretech technology works. When these products touch the leaf of the plant or the seed of the plant, when the plant germinates, the whole plant reacts with switching on the immune system of the plant, which makes the plant healthier, makes it more robust, and ends up producing more yield or better quality product for the grower. Now, Pretech, compared with Harpin alpha beta, is an order of magnitude more exciting. It's a lower cost, it's higher potency, it's more stable and easier to use. So we see this as being a technology which is going to be very widely adopted. It offers great benefits to growers. It's really a potentially disruptive platform technology. We've invested more than $20 million since 2012 in Pretech, in these vaccines for plants. And we're now about to launch our first product in the second half of this year. So for these two reasons, a profitable commercial business and the vaccines for plants, our Pretech technology, we believe that plant healthcare really is at an inflection point. So in the next slide, we were very excited very recently to complete a fundraise. We raised $9.8 million, which I'm happy to say was not only oversubscribed, substantially oversubscribed by new investors, and done at a very favorable share price, but it's also resulted in a better balance in our shareholder register. So we now have more widely dispersed shares across more shareholders, which should promote liquidity in the stock. Now, what are we going to do with that money? We're going to invest it principally in rolling out our exciting Pretech products. We sat down as a board 6 months ago and we said, look, Pretech, these vaccines for plants, are looking so exciting. We simply don't have enough money to be able to optimize this platform. So we will be spending it in launching our very exciting product, Saori, in Brazil in the second half of this year. I'll tell you more about that in a minute. But also the launches that we plan in the United States next year and the year after, and a whole pipeline of blockbuster products which follows. The other element that we're going to invest in is entry into Europe. Europe is the world's largest market for sustainable agriculture, and frankly, we're currently underweight in Europe. So we want to bring particularly the benefits of Pretech to the European market. So we're going to use that money to support growth into very large $5 billion of opportunities. Now, stepping back a bit on the next slide here, I'd like to take the first part of this slide and then pass to Jeff Tweedy. Some of you may be familiar with Plant Healthcare. We've been around a little while. We've been an AIM-listed company for a while. And many people say, well, actually, what have you guys been doing over the last 8 years? Well, a lot, but it's only really now coming to fruition. Agriculture takes time. So when I first got involved right at the end of 2012, Plant Healthcare had a number of non-core activities. And the first thing was to get rid of those so that we could focus on developing Harpin Alpha Beta. We also kept our business in Mexico, which we won't go into today, but is a good unit. It generates profit and it generates cash, but it's not growing at the rate that Harpin Alpha Beta is growing. Then Harpin Alpha Beta, as I mentioned earlier, I joined the company because I was excited about the product, and I remain even more excited than before. But frankly, the product was not properly positioned. And it takes time in agriculture to work out the best way to position a product. You do a trial, for example, on corn in the US, and maybe you want to modify the application rate or optimize the timing or something. It's 12 months before you can try it again. So it really takes a number of years to get the product properly positioned. But then we started to get some traction and we hired Jeff Tweedy. So Jeff, over to you.
Thank you, Chris. As Chris mentioned, first of all, we had to really get the positioning correct on Harpin. It had been positioned in the past to do everything on every crop, and that's just not how it performs. So I think once we got that positioned correctly, then we started working with larger distributors. In the past, we had small distributors, which did a good job, but they limited our market access. And the first of those changes came in 2018 when we launched Harpin Alpha Beta on Brazil sugarcane. That was done in conjunction with Coplicana. We'll speak to more of that in a minute. But that was our first entry into a very large row crop market with Harpin Alpha Beta. The second was the launch of U.S. corn. We are aligned with the second largest distributor in the U.S. For a seed treatment application that goes on corn. And in 2019, we expanded that distribution to include Wilbur Ellis for our specialty crops business. Wilbur Ellis had been doing business through a different distributor, but we work with them directly, and that really gave us broad market access to the U.S. specialty crops. As Chris mentioned earlier, our sales in the U.S. and Brazil doubled in 2020, our on-ground sales. That didn't necessarily represent our sales to these customers, but it did show substantial growth with about $1 million of inventory reduction in the field. We have very close relationships with these distributors, which give us access to their sales and inventory information. And in 2020, we achieved cash positive and EBITDA positive for our commercial business for the first time. And this year we expect a launch of Harpin Alpha Beta in California. In fact, it's going on right now. This is our first launch into the California market for Harpin Alpha Beta. And this will be on almonds and grapes. So that's kind of where we've been, where we headed. We really want to expand Harpin Alpha Beta and this relationship with Wilbur Ellis into new product mixtures. They have a very large product line, and we want to look for opportunities to mix our products with their and expand into different crops. We want to launch a Generation 2 product with our partner in the corn market to really expand market access. We want to grow in South America. Today, we are making applications of Harpin Alpha Beta on sugarcane. We really want to expand that to crops, which we have very good data on, and coffee would be an example of that. We want to enter new markets in Europe and build a team out in Europe, and use a footprint that we have with large distributors in Europe. It's a bit more fragmented market in Europe, but we do have alignment with some exciting distributors that we look forward to making some announcements there in the future. And we want to continue to generate cash and profit for the business with growth rates above the 16%, as Chris mentioned. If we turn to our commercial business, drilling down into that a bit, the first one is sugarcane. We saw a 3x growth in sales year over year in 2020. On the bottom right is a chart. We treated over 43,000 hectares of sugarcane in Brazil, and that was done through a very large distributor, Coplacana. It's done, and the reason is because of yield increase. We've seen an average of 23% over trials since 2016. On the right, we have a testimonial from a grower who's used the material for 3 years, and we pulled some samples from the field. The left is showing a grower standing there with a untreated versus treated, and this sugarcane is over 4 meters tall. So they see significant yield increase, but it's also visually what you see in the field. As I mentioned, we treated over 43,000 hectares. That's approaching 1% market share in the state of Sao Paulo. There's roughly 5 million hectares of sugarcane in Sao Paulo state. We believe if we can get a 10% share of this entire market, it's a $15 million sales opportunity. So really exciting about the results and the growth that we're seeing there. And the last thing I'll mention about Brazil, we put factoring in place this past year. Factoring is very important to make sure that you are bringing in and keeping your cash flow for the business, which is highly important with a crop like sugarcane, where growers typically will harvest every 12 to 18 months after planting. The next market I'll turn to is our U.S. market. First in corn, we saw almost a 2x growth in 2020 of our own ground sales. We treated roughly 650,000 acres of corn in 2020, and it's really due to stronger and taller corn, which results in a higher yield increase. If you look to the bottom right, there's corn from this past year, and untreated on the left, treated on the right. It was treated with Harpin Alpha Beta, and that application goes on at the time of planting, like a seed treatment. This corn was under severe stress from drought, lack of rain, and heat, and the Harpin Alpha Beta treated corn grew right through it, resulting in much higher yields, and that's what we typically see, especially as corn is under stress early in the season. With this distributor, we believe if we get a 1% share, this is a $5 million opportunity. And we have very close relationships with these distributors, which is important for a couple of reasons. Number one, we see their sales and their inventory on a monthly basis. That helps us plan our business. So we make sure that we have product available, but we're also managing our working capital from an inventory and really optimize that. Lastly, I want to touch on the specialty crop market. This is our newest relationship with Wilbur Ellis. They're roughly a $3.4 billion customer. In the specialty crop market on the West Coast, it's inputs that go into these crops are roughly $1 billion. If we were to get 1% share of that, that's a $10 million opportunity. And how would we do that? We're going to do it through driving adoption on many crops. Wilbur Ellis is one of the largest distributors in the West Coast, and so they have a great presence with a broad product line. We want to look for additional mixtures there. We're launching in California, as I mentioned earlier. Applications are going on right now into grapes and almonds shortly. So we expect very good uptake this coming year. We want to look for new product mixes and launch those with the Wilbur Ellis product line. And then lastly, expand into the West Coast or East Coast market. The crops are the same. Wilbur Ellis has a great presence, but we've never had a distributor who had the presence there and be able to position the products. So we will begin that this year and look forward to success. And in summary, I would say we've really changed the dynamics of this commercial business from where it was a few years ago. We're present in large row crops, which is unique for small biological companies like ourselves. They mainly play with smaller crops, smaller distributors. We have access to large row crops as well as specialty crops, and we're a profit-generating business, which sets us up nice for the future. And that should really help us as we bring our Pretech technology into the marketplace over the next 2 to 5 years. And I'll turn it back over to Chris.
Thanks, Jeff. Appreciate that. And I hope people see now why we're so excited about growth in our commercial business. But I now want to move on to talk about Pretech, our very exciting new technology in which we've invested more than $20 million over the last 8 years. So first of all, what is Pretech? These are these vaccines for plants. It's easier to think about them as switching on the immune system of the plant so that the plant is healthier and more robust. I should say that this is not gene modification. This is not a GMO technology. We're not changing the genome of the plant. This is just making plants healthier, just the way that a vaccine, we hope, will make all of us healthier. Now, the technology is derived from naturally occurring proteins that switch on the natural defense and growth systems of the plant. And as I mentioned before, it's a big advance from Harpin alpha beta, more potent, more stable, cheap to make. And we have a whole pipeline of differentiated Pretech products. We're actually working on 6 lead products just now, but we could do many more than that. And finally, these really are cheap to make. We're supplying our first launch from a pilot plant, but we are in advanced discussion with long-term commercial toll manufacturers, and the cost per hectare is really quite low, and we fully expect gross margins to be at least as good as they are for Harpin alpha beta, which is about 70%. So from the farmer's point of view, what he gets is greater crop yield and quality. What the world gets is greater sustainability. Now, Pretech peptide products are classified by the US Environmental Protection Agency as low toxicity and no residues. And that's really important. At the same time, this is compatible with mainstream agriculture, not just organic. And for that reason, they're faster to register and cheaper and quicker to market than conventional chemicals. In Brazil, our first launch coming up later this year, we got registration in 13 months. Now, we were expecting it could take 2 or 3 years, and a conventional chemical would take 5 to 7 years. We did that in 13 months because the regulatory authorities want to see these very effective and sustainable products brought into the market. So I want to bring Pretech to life by talking about the example of our very first launch. The product was originally called PHC 279. We've recently named it Saori, and we're going to be launching it in Brazil on soya. There's 38 million hectares of soy in Brazil. Brazil is the world's largest producer of soy. It's really easy to use. Farmers already get their seed and they put chemicals on it. All they have to do is add the Saori instead. And field trials over the last 2 years have shown a significant yield improvement, which is worth about $85 a hectare at current prices, which gives a really good return on investment for the grower. But I want to dig into that a little bit more this year. We're doing some very extensive trials on more than 30 places all over Brazil, and we're getting early results from them already. Now, soy in Brazil is planted October, November, December, essentially, and then it's harvested from about now onwards. And we've been doing extensive field tours in February and March. And the photographs at the bottom here show are from trials that were taken in February this year. Now, the photographs are a little bit small, but if you look at the photograph on the left, that's conventional treatment. So the farmer has taken his soy seed, he's put the normal things on it that he does, he's planted it, and up has come a good, healthy soy crop. The one on the right is exactly the same seed, the same chemicals put on it, but in addition, the farmer has put Saori on it. And you can immediately see there's more plant there, there's more leaf, it's a bigger plant. Now, the first thing there is that the farmer will say, hey, that bigger plant is more likely to give me more yield, and particularly if the crop later is under some stress, for example, it doesn't rain when it should, and the soil gets too dry, or indeed there's too much rain, then a bigger plant, a healthier plant treated with Saori is more likely to be able to grow through that and give a good yield at the end. But even more exciting than that has been the effect on disease. Now, disease in soybeans in Brazil is a massive problem. Brazilian farmers spend $2.5 billion a year on fungicides to control disease. They make anywhere between 5 and 7 applications. And if they don't, very often disease will be absolutely devastating. I personally have seen soy fields where there's nothing left to harvest because the disease has simply destroyed the crop. Now, in the plots treated with Saori, we found no disease. In the plots treated with just the conventional treatment, like on the left-hand side photo here, there was disease. Now, that is huge. First of all, from the farmer's point of view, if he can reduce the amount of fungicide he's using, that helps him economically because they're very expensive products. Secondly, from the point of view of the planet, less fungicide means more sustainability, less toxic product in the environment. I spent 30 years selling fungicides. They do what it says on the tin, but they are toxic products. So I think Saori is a really nice example of the sort of benefits we can bring and the scale of those benefits, the scale of the opportunity. Now, we are in discussion with potential distributors in Brazil, and we expect to say something about that in 2 or 3 months' time. We don't have a contract yet, but I can tell you that there are a number of distributors who are interested. One thing I would like to say is that you should not expect millions of dollars of sales of Saori this year. For a start, the registration came very quickly, and we're still working with product from our pilot plant in the US. So we have a limited amount of product available. But also, listening to Jeff Tweedy, I think you'll understand how product adoption in agriculture tends to be relatively slow. The critical thing we've got to do in the first year is to get Saori used by as many different farmers as we can, early adopters, influential growers, so that when we have full supply in 2022, sales will ramp up quickly. And we fully expect to be selling double-digit millions of dollars of Saori in 3 to 5 years' time. So in the next slide, I do want to emphasize that Pretech is about a lot more than just Saori in Brazil. Here it is at the top of this slide, but then hot on its heels is PHC 279, the same active ingredient, in the United States. Now, we have signed a joint development agreement with Wilbur Ellis, our partner in specialty crops in the US, and they are actively working on 4 different peptides. They have an exclusive relationship with us to develop and commercialize those 4 peptides just in fruits and vegetables in the US. And PHC 279 is likely to be the first of those. We have submitted to the Environmental Protection Agency for registration, and we expect to get registration in the middle of next year, and we're planning several product launches with Wilbur Ellis after we've attained that registration. But beyond that, we have products like PHC 404 and 949. 949 is particularly exciting. This is a product which targets soil pests called nematodes, where conventional chemistry is not very effective and quite difficult. And we are showing incredibly good results with 949. We're working with Wilbur Ellis. They are very, very excited about 949. We're going to submit for registration in the middle of this year and hope to have that around the end of next year and then launch it. Beyond that, 949, we're working also in South America. And then the big upside is Brazil, is Europe, I beg your pardon, where we see a lot of opportunity to come in with Pretech. So in total, we are targeting markets worth more than $5 billion. And this slide, you may note, at the top it says funded, and at the bottom it says not funded. Now that we've completed the fundraise, we now have the resources we need to move forward with the launch of the products, with all of the products on this slide. So the next, I do want to spend just 2 minutes on Europe. Europe, a huge market for sustainable agriculture. Look at the pie chart top left there. Roughly half of the global market for biological solutions is in Europe. Look at the pie on the bottom left. Plant healthcare is underweight in Europe. So we want to get into Europe, but it's a fragmented market and it's highly regulated. So we will need to find our way through that, and it will take some time. Now, we may well partner with larger distributors like the European equivalent of Wilbur Ellis, although they tend to be national rather than pan-European, or larger companies also in Europe. But we're also looking at smaller companies, and as we study Europe in more detail, we find there are very large numbers of small companies like ourselves in Europe, and none of them have competing products, and many of them have complementary products. So we're talking to them, and then they spot our presence in the US and Brazil and Mexico, and you can see some very interesting complementarity there. So we are at the early stages of discussing alliances, joint ventures, potentially even M&A here in Europe. So finally, how do you expect us to perform over the next couple of years? What are the milestones you'll be expecting us to deliver? First of all, on the commercial side, as Jeff Tweedy points out, you should expect us to deliver continued product adoption in those core markets in the US and Brazil. We'll also be doing more in Europe, and we expect to sign up one or more major distributors in Europe to deliver revenue growth globally above 16% and consistently generate profit and cash. On Pretech, our vaccines for plants, watch for the announcements around the distribution of Saori in Brazil and the launch later this year. Look for our regulatory submission of 949 in the US this year, and next year the registration of 279, and see how we progress this joint development agreement with Wilbur Ellis and other joint development agreements with Pretech. And as we map out our strategy for entering Europe, to track that as well. On the group level, we will be making announcements about appointing toll manufacturer for PHC 279 for Saori. We will also talk about our strengthened IP. We have very, very good IP around Pretech. Our first patents have been granted by the US Patent Office, and we plan to do more of that. And of course, as we drive towards making plant healthcare a profitable and cash positive company as a whole. So thank you very much for your attention.